And good evening, and thank you for joining us on the program Capital Market. I'm Temple Ashaju. Quite a number of stories we have lined up for you this evening as part of updates that came in this week for your investment decision through the Nigerian capital market. And we'll begin with the very first one from the Central Bank of Nigeria, which says Nigeria's provisional balance of payments swung into a deficit of $4.54 billion in the third quarter of 2018 compared to surplus of $503.97 million. This is in addition to the $2.78 billion recorded in the preceding quarter and corresponding period of 2017, respectively. The report from the central bank shows that the current account balance worsened from a surplus of $4.452 billion in the second quarter of 2018 to a deficit of $3.105 billion in the third quarter. The financial account balance also indicates an increased net incurrence of financial liabilities of $10.724 billion in the period under review. Now, the Apex Bank attributes the deficit to the increased payments for imports in the country. And the Nigerian Stock Exchange has announced the migration of real estate investment trust schemes and closed-end funds to a separate board under the equities side. The shift, which takes effect from December the 17th, follows an earlier statement by the exchange to restructure the framework regarding the trading of REITs and closed-end funds listed and tradable on its platform. The migration of the asset class aims to promote visibility and liquidity of listed REITs and CEFs in the markets. And to the SEC now, where the Acting Director General, Ms. Mary Uduk, says the issuance of sovereign green bonds has the potential to solve Nigeria's infrastructure deficits. In a statement, Ms. Uduk explains that the attendant effects of climate change lately justifies the need for sustainable infrastructure projects in the country. Ms. Uduk notes that there's a need for proper monitoring of the use of proceeds for green projects with multiple social merits, as the country's infrastructure deficit is expected to hit $878 billion by the year 2040. The SEC chief restated the Commission's plans to sustain an active, enabling environment for the issuance of these instruments by qualified entities. And back to the stock exchange, where C&I Leasing PLC is embarking on a share reconstruction exercise and has this week notified the management of the Nigerian Stock Exchange of the planned action. Now, the reconstruction shows that 4 ordinary shares will be consolidated into 1 new ordinary share for existing shareholders. But the company has also announced on Wednesday, December the 12th, 2018, as the qualification date for the share reconstruction program. Now, following the planned action, all existing share certificates are expected to become null and void on the qualification date, and new share certificates in C&I Leasing issued to shareholders whose names appear on the company's register of members as at the close of business on the qualification date. Now, trading on the company's shares was fully suspended on Thursday, December the 13th, to enable registrars update the register of shareholders for the planned share consolidation. And on Thursday, the Nigerian Stock Exchange played host to the team of financial advisors on the second tranche of the federal government's 100 billion naira Ijarah Sukuk, which is currently on offer. Now, Sheon Olatidoye of FBN Quest Merchants Bank explains to the investing community why Nigeria is making the offer.
Currently, the debt stock of the nation stands about 22.3 trillion naira, out of which the external debt, which includes the debt from federal government, state governments, and the FCT, stands about 6.7 trillion naira. Domestic debt, which is our local debt alone, FGN, stands about 12.1. Domestic debt, which is FCT and the states, which are loans from the capital market, loans from banks, and some other institutions, stands about 3.4 trillion. And the total domestic debt, that is an aggregation of your total debts by FDN only and total debts by state, that's the state and FCG, FCT rather, is about 15.6 trillion. So in total we have 22.3 trillion. Now there has been several debates as to are we borrowing enough or are we borrowing too much? If you look at the slide on the screen right now, it talks about revenue to GDP, which currently in 2017 is about 10%. This is actually one of the lowest amongst our peer nations. Debt service to revenue, as you can see, the federal government revenue is 2.7 trillion, and we're using 1.8 trillion to pay debt. This is not sustainable in any way, shape, or form. Job creation, of course, spending 100 billion naira to fund roads, there will be jobs. I'm not an engineer, so I won't pretend to be one. But I believe that if you have 100 billion naira to spend, you need people to do the work. And then investor confidence has been affirmed. We've had increased retail participation. The last time we did, we had about 5%. This time around, we are hoping that we'll have much more than that. There are 2 rentals that have been paid. It's listed on the NSE and FMDQ. Over 15.6 billion has been traded. This was as at about 3 weeks ago, so I'm sure the number would have increased now. And the yield as at the 3rd of December was 15.46%. Now, we just wanted to take you through the project that we did at that, at that time. That was last year. And you will be surprised to hear that the money was actually utilized within less than 6 months. Because some of these projects have been there for God knows when. And if you put 100 billion naira into construction in, with the kind of volumes that we have, some of those roads were six lanes, three lanes on either side. 6.67 billion naira goes like